Incur the expense. I use up something. Trying to generate revenues. Debit expense, credit what? I owe it. How about a payable? So debit salary expense, credit salary payable, maybe? There's an accrual of an expense. What's an accrual of an expense? I pay for it before I used it. What do you call something you paid in advance? Prepaid. Prepaid is a deferral of expense. Debit the prepaid credit cash. Then what do you do when you use it up later? What does it become when you use it up? What does everything become when we use it up trying to generate revenues? An expense. You debit expense and you credit what? What'd you use up? The prepaid. This is easy. It's a piece of cake. If you read, you study, you pay attention, you stay on top of it. Now, it's terrible having a week off because you guys forgot everything you already knew. Because you think, oh, I got to do that quiz, life's good, huh? Trust me, if you become a CPA on the CPA exam, you have to look at it for credit. Right? If you ever want to manage anything in the entire course of your career, you have to be able to read financial statements. I mean anything. Right? Wow. Okay. He wants to stop. So get back in. Yes. Sure. Sometime in a review session. We're going to do new material now. Wow. That's mean, huh? None of your work quizzes in class. I'll work in the review sessions on behalf. Getting ready for tests. Use that. And do we have a lot of review time? Yeah, for intermediate. I think no, it's for you. Is it for you guys or for intermediate? I don't know. I'll go one from 3 to 5 today. All won't be 3 to 5. They just will, right? Because people never leave. Even though our schedule quiz is 3 to 4, it always goes to 5. Right? It keeps going. You guys can come to those or not. You can watch them or not. Suit yourself. Right? Yeah, I did tell you guys everything's voluntary, right? Reading the book's voluntary, coming to class is voluntary, doing homework's voluntary, taking quizzes is voluntary, taking tests is voluntary, taking the finals voluntary, right? It's all voluntary. You're adults. Do it or not. Those of you who've been doing it are feeling pretty good right now. When I just talked about that, I bet there are 4 or 5 people in here that knew what I was talking about all the way through that. And the rest of you are behind that. Okay? By the way, there will never be that many A's in here. On the first quiz, I always have that, right? It's just so easy. Second quiz, we'll have 3 or 4 A's. On the test, it'll get back up to 5. You know why we're only going to have 3 or 4 on the second quiz? There's a whole bunch of you guys that got 80% or above are going to quit working hard because, oh, I'm good. I got it. And then you're going to die on the next one. It's human nature. It's what we do, right? As soon as you do something really good, then you back off and screw up. Anybody ever done a sport before? You know, you have a really great game. You're all pumped up and confident. The next game you go out there and you're crap, right? There's also something called regression towards the mean. If you do really well on something, what's the odds of improving that next time? Probably not. Probably going to go the other direction, huh? Okay, fine. Okay, we get back into psych classes and stuff. Okay, so what was I going to do? I guess we're going to do deferrals and accruals. We're talking about that. Get back to work. Okay, we're going to do that. I wanted to mention that to you. I wanted to tell you how you're doing this. Now, oh, by the way, what I want you to do is just put this quiz away and forget about how you did on it. I don't care. If your feelings are hurt right now because you didn't do very well, don't have your feelings hurt. Just work. Right? Just work and relax and deliver. Okay? When you're at work, you screw something up, you go home, or you work harder. Right? You know, obviously. Right? Unless you quit the job. Okay? Which is always an option. You can't do that 2 times. Right? That'll screw up your career. Okay, so if you can do that, if you don't like the job or it's not working out or whatever. Same with this class. Okay? Right? So anyway, dig in, go after it. So what you want to do now is instead of thinking about how you did, right? You want to go for it, right? Get this next piece, get this next piece. And you know what? In order to do this next piece, you have to have that piece. So we are really going over the quiz. What we do new material. It's the same stuff. Wow. Right? It's going to build, it's going to build. Remember, if you don't know the alphabet, you can probably never learn how to spell, right? That's what we're doing. Okay, just kind of fast. All right, gang. A synonym for left. Debit. This is too easy. Synonym for right. Okay, why are they named that? I don't know. They just are. You have to know it. Okay, there are 5 kinds of accounts. What goes in the balance sheet? You know what those things are, right? What goes in the income statement? You got it. Very good. Oh, I know what I wanted to do. I wanted to show you the new syllabus. You have to have. Let's put the debits and credits in here. How do you increase assets? Why? Because they're on the left. That's it. Remember, put the assets on the left, debit means left, you got it. Right? Remember this, right? You just know it. Okay? You remember what? Debit means left, and the assets go on the left. You got it, and you're there. Liabilities and equity, how do you increase them? How do you reduce them? Anytime you're screwing up, it's because you don't think back on this, right? You either don't know what happened and what the business transaction was, what they exchanged. That's possible. And by the way, when we get further in, that's real possible, right? Imagine one major company buying another major company. G's appliance division is getting bought out again. Let's say, right? Trying to do it again, right? Imagine the journal entry. Okay, wow, all this stuff, right? This being exchanged. Okay, but anyway, fine. Assets, liabilities, equity, possible position of stock too. Okay, anyway, how do you increase revenues? Why? Not because it's on the right. Why? It's on a different statement. It increases equity, and equity increases the credit, so of course it's got to be a credit. What if you put too much in? What would you do there? Debit to get rid of it, right? You don't draw lines through things. It's in the computer anyway. Okay? What do expenses have to be, seeing as they have to be the opposite? And what do expenses do to your equity? Reduce it, decrease it. One word out of both of those. Okay, anyway. So decrease it, reduce it, right? Okay, so what do we got? It must be a debit for both of those reasons. Big deal. Okay? What did you put too much in there? Credit, of course. Use it, use it, use it. Okay? All right. Net income? It's a credit. Is it an account? No, it's just a difference. Okay? Some of you, when you did your quiz, treated that kind of like as an account. We're not even treating. It is true. As I increase revenues with a credit, it increases net income, which increases retained earnings, which is an equity account. Right, guys? That net income is going to go into equity. All of that should just be crystal clear to you guys. Simple little model. Nothing to it. The next step is, can I use it? And that hung some of you guys up, right? Okay? And we'll fix that. Okay? You'll actually, I guess you'll fix that. But we'll keep working on it until you're there. Okay, good. Well, let's look at this I sent to you guys. You've seen it, I think. Am I right about that? Okay. Snow. Oh, man. Okay. A lot of semesters with that. Anyway, always spring, of course. So anyway, what we're doing today is going over chapter 3. Does that sound good? All right. And then we're going to, well, it says the 11 a.m. class is at 2:14. Oh, I got the wrong class, 11 instead of 12. Oh, well, I think we can stay here at 11 for the next class. Anyway, next time chapter 3 again, then chapter 4 for 2 days. So just as many days on each of the areas, right? And then there's an optional study session. I guess yours is next Monday, huh? Okay, for quiz 3 and 4. And then what I want you to notice is there is no longer a review day for tests. There will still be a review session, but there won't be a review day. Everybody see it? So we lost that review day, and we'll start catching up. Okay, so that'll gain a day. And then it goes through exactly the same. Nothing looks any different except it's moved a few days, right? 2 days to be exact. And then when you get down to the next test, you'll notice there on March 7th, there is an outside review session, but no day in class to get ready. Everybody got the idea? Okay, so it'll just be boom, boom, boom on those. And we'll have to figure out some way for me to get your quizzes back to you prior to you doing that test. Okay? Because on a Tuesday or whatever. Okay? Figure out something. I'll grade them that night and get them back to you. Okay? Everybody got it? So that's the only change. Those 2 changes. And then everything else is the same in terms of the timing. Okay? We're back up to speed. Okay? Nothing else changed. Everybody good with that? And you can find that. I would have printed them up for you, but my computer died Friday morning. The hard drive is dead. So I'm hoping that they can recover stuff. So otherwise, what a mess. So anyway, it was annoying. All right, good. So enough on that stuff. All right, let's do this deferral and accrual thing then. Okay? That we just did real quick, but let's do it slowly. Okay? This is what it's about, you guys. And by the way, there's nothing new. With the accruals and deferrals, there's really nothing new. We already did the model. The model is the model. That accounting equation you're looking at there, you know, the full thing with the balance sheet and income statement, that's it. Everything's going to fit in that. I'm not giving you anything new. The author's not giving you anything new. There might be another business transaction, but there's no more accounting. That's all there is to accounting. Got it? It's really a powerful little model. There's nothing to it. If you get your head around that, you have a made in here. And get so you can use it, right? And if you don't, you're going to think accounting's hard for the rest of your life. Right? Basically, I've got two types of students that have taken my classes. The vast majority of them, well, the ones that survive, right? The ones who get a C and above think accounting's easy. Then it's just a function of how hard they work to see if they can get a higher grade, right? The ones who go below C think accounting is absolutely impossible, they can never do it. And it's because they know this or not. I really believe that. I don't think it's because they know left and right. My dad was teaching me to drive, he told me to turn left and I turned right. You got to be panicky kind of then, because I literally didn't know left and right, I guess. You know, anyway, so at least at that moment, you almost had a coronary. So anyway. All right, guys. So I don't know if you even have to know left and right. Window side, door side, people say, right? Okay, anyway. So let's start a business. Let's give you a service, okay? Let's have a business. Give me an example of a service business, you guys. Somebody who provides services and therefore earns what? Service revenue, or it's called service revenue, instead of sales. Sales would be if I'm selling goods, right? Everybody agree with that? Groceries. Okay, anyway, so give me a service.
Like a taxi service?
A what?
Like a taxi service?
Yeah, taxi service would be okay. Yeah, you name a whole lot of sure, taxi service would be okay. All right, and it's going to be taxi service revenue, taxi revenue, they call it if they want. Okay, so there's a taxi company, right? Okay, so they're going to have service revenue. Okay, might they also, what about the people who are using the taxi? Let's say it's another business using the taxi, right? They're using the taxi to ferry their people around in the city, right? Place to meetings or something, okay? So imagine you're in New York, it's Chicago or something. You're using taxis constantly, okay? What do you think? What is it to them if some other company uses the taxi and the taxis haul their employees around? And the reason they're hauling their employees around is to get them to meetings, to have them deliver stuff, you know, whatever they're doing, right? Okay? And that's how they do what? Yeah, they earn revenues by doing all that stuff. So then what's the taxi to them? It's a cost they incurred to get their revenues, which makes it a what, everybody? An expense. Ah, it'd be taxi expense for them, huh? You like it? So we've got taxi company. So let's do this. See what we'll do is we'll put up that split screen. Thank you. Okay, now, here's the thing, you guys. I'm not working problems that are in the book. I'm not working things off the quizzes until we get close to the quiz, but I'm doing exactly the same thing. Right? What we're doing here is all you need to know in order to work any of the problems. Got it? For these couple of chapters. If you can do this, they can fit within it, right? You got it made. Okay? All right. So we're going to do revenue and expenses, okay? Let's be the taxi company. Taxi company. We'll call them taxi code, right? All right. Taxi company's going to earn the revenues. Wouldn't you agree? See, that's why, you know, you might love having a taxi and driving around in it, you know, big yellow thing, it's wonderful. Now these green, huh? Okay, anyway, so you got these taxis, right? You're driving around, it's fun, right? I hope you enjoy what you're doing, but why do you really do it? To generate revenues, to become wealthier, right? Just this. You're going to try to make a living. Okay, now who might use them? Yeah, a company that might use taxis. Oh my gosh.
Delivery service?
Name a, well, maybe delivery service, but they deliver using taxis? They might, although they usually use bicycles or they use their own vehicles, right? In the city, bicycles a lot of times are little things, and then, right, they do, you know, or run on the subway literally, and, or whatever, you know, but, yeah, but taxis are kind of expensive for that. Taxis are more for what? Yeah, maybe going to business meetings. Okay, I'll tell you what, IBM. I bet you anything that IBM, you guys know who IBM, International Business Machines, right? Make huge computers. Okay, IBM and little ones. I bet you IBM uses taxis, huh? They are the customer here. So what's it going to be for them? An expense. And we're going to call it taxi expense. You like that? Okay, now think of the three distinct periods of time when you could get paid for something you do. If you're earning the revenues, when could you get paid? At the same time, what? Oh, before, during, or after. Oh, that's it, right? Would you watch a video or something? No? Anybody watch the video of me do this yet? Oh, wow, you people. You had a whole week. They're out there on YouTube. And I say exactly what I'm doing now. Over and over. Not exactly the same, but it's the same stuff. You know what my intermediate students did? Not all of them. I got emails from people asking me questions about what I'd said in a video that I'm going to talk about the same material today. I have lots of them actually watch. This is sophomores, right? There's accounting 102 after this, and then there's 211 if you're going to do finance or accounting. They already watched the video for the stuff I'm going to cover today. You know why? Because they know they're not going to understand what I'm talking about. It's getting too complex, so they want a chance. So some of them tell me they watch the video first, then they read the chapter, and then they watch me do it again in class. And then we're getting ready for the test, they watch it again. What's wrong with them? But anyway, yeah. Right? Whatever it needs. Whatever you need, right? How many of you sat around and did nothing part of the time that we weren't here? All of us, right? You watched a football game or two yesterday, and you didn't bother to watch that video. Come on. Especially if I just got a D or an F on this, what would I have done? Either drop or get to work. Nothing in between, not just sit around and pray. I've done that before too. I prayed before when I went to school, you know, right? Particularly in grade school and high school. You know, you pray, there's a test today. Help me, God, to survive this. God never came through. Not once, right? Okay? Sometimes the teacher did by asking almost nothing, you know, but I don't think God did that for me. Okay, anyway. All right. So one is, she said all three. One is what? Before. Another is, if you get the cash before you do the work, right? By the way, on the expense side, could you pay for it before it's done for you? Of course. What's another one? During the same time, right? At the same time. Have you guys ever bought anything and given them cash at the same time they gave it to you? Of course, right? Sure, you do that. And you can sell things that way, right? Obviously, somebody buys it, somebody else sells it. Got it? So cash now, cash in advance. What else? How about later? Okay. Have you guys, anybody have an insurance policy? You know, car insurance? What does the insurance company have you do? You pay them in advance, don't you? That's because they're big and powerful and you're tiny and weak. Okay, just one person. Okay, what's the other reason they have you pay in advance? How many of you would pay your insurance premium at the end of the year, after the year's over, if you knew you didn't have a wreck? No, I don't need the insurance. So a lot of people wouldn't pay it. So they get the money up front, don't they? Okay? Does McDonald's get the money up front? Yeah, they do in a way. They get cash now, don't they? Do they let you pay later, though? No, because after you eat that crap, you're sick and nobody pay for it, right? So they don't give you credit, right? Who gives you credit? People who really want you to buy things, huh? They'll let you pay later. And their competitors are letting their customers pay later. If they don't let you pay later, will you buy the thing? Maybe not, particularly if it's expensive, right? Okay? So you might want to pay over time or something. All right, anyway. So those are the three time spans. If somebody's going to pay you when you sell it to them, it's got to be one of those. Everybody agree with that? This is going to capture everything. Cash now, cash in advance, or cash later. If they're going to pay you, it's got to be one of those three, and we will know how to account for everything there is. Got it, guys? Everything there is. This is powerful. If I'm buying something, I'm going to pay for it if I buy it because I have integrity, right? Well, unless I went broke. That could happen. People go bankrupt. Even with integrity, you can't pay. But anyway, if I'm going to pay, what are the three times I might pay? At the same time I receive the goods or services, right? Or in advance, or later. If you know how to do those six things, you know how to do everything. Everything. All the way through the course. Got it? And you already kind of do. Just use the model. Let yourself think about it. Okay, so let's do cash now. You know, these people hop in our taxi cab. We drive them across town, and we bill them $100. Okay? Cash now. Okay? So this is a cash transaction. Cash now. Everybody got it? What do you think the journal entry is for the taxi company? What happens to them? They earn sales revenue. Well, we won't call it sales revenue, though. We'll call it service revenue because it's service. Sales is a product or goods, groceries or whatever, tables, chairs, whatever. Okay, folks. So, yeah, that's true. We earned revenue, and what else happens to us? We got paid cash. So, what do we have? More or less cash? So, what do you want to do to cash? So, you use an asset, you have more. It's the same stuff, isn't it? So, it's going to be debit cash for the $100. And they need to credit something. Debits have to equal credits, right? We know that. Okay, and what do you want to credit? What do you have more of? Service revenue. What do you want to call this service revenue, seeing as we're driving taxis around? How about taxi service revenue? You put a name on it, and by the way, they could just call it taxi revenue, or if they wanted, they could call it service revenue, but then if you have a whole bunch of different kinds of service revenue, you might want to tell them apart, so you put them in different accounts. Make sense? Track them separately, right? I provide all kinds of different services. Okay, so debit, cash, credit, taxi service revenue. Everybody got it? What would happen on the other side? You know, people, idea, they give you the $100. They gave it up, didn't they? And what do they have? They have a what? An expense. Maybe taxi expense? I don't know, whatever you want to call it. Okay, put a name on it. Okay, so how do you increase expenses? All of them? Debit. So what do you want to do, everybody? Debit taxi expense. I'm not kidding, it's this simple. Okay? What are you going to credit? What would you give up? Here's the deal. Don't try to make it one thing. It'll drive you crazy. If you're trying to write it on one line, two things happen. I used up the taxi ride, right? I did use it up. As soon as we rode, I'm done, right? I've used it up. I didn't buy an asset, right? I used it up. And I'm trying to generate revenue, so it's an expense, isn't it? Okay, so I've got the taxi expense, that's one thing. And then, oh, by the way, I paid for it. That's the other thing. I gave up cash, right? They're not the same thing. I don't have expense because I gave up cash. Why do I have the expense? Because I took the taxi ride. Ah, got it? So what did I give them? Cash, which is an asset, and I have less, so what do you want to do to it? Credit, and that's all there is to it, guys. Think about the revenue side. Why did I debit cash? Because they gave me cash. Why did I credit taxi service revenue? Because I gave them the taxi ride. I earned the revenue. Do they have to pay me when I give them the ride? No. Do I earn the revenue when they give me the ride? Yes. Oh. Do I have to pay them when they give me the ride? No, I could pay in advance or I could pay later, right? Why do I have the expense, guys? Because I used up the services. Everybody getting it? Getting this? This is going to be easy. Don't lose that, okay? Don't fall back into, oh, I'll just remember all these. I've had a couple of evaluations over the 30-some years I've been teaching where it was a pretty good class considering it was all rote memorization. And they always used to ask, what's your grade? Always a D or an F. Always for that. This isn't rote memorization. Who could possibly remember billions of transactions? Right? You can't remember that. Even thousands. No way, huh? We'll do thousands in this class. Right? But you know what? Everything is what? There are 5 things. What are they? Assets, liabilities, equity, revenue, expense. Identify what it is, you know how to account for it, right? Of all the billions of things out there that could change hands. Okay? We went out there, we cut down those trees. Terrible. They went to cut down those trees, what would they turn into? If they ceased to be an asset, timber, land, timber on it, right? Not much timber, a little bit. Okay? If they cut them all down, what would they turn into? Inventory. I guess firewood, that's something, right? Firewood inventory, huh? Still an asset, but a different one than trees standing, huh? And then what would they become when they sell them? The major expense of selling it, called cost of goods sold. Those assets would turn to an expense. Be terrible. I want them that first one. Okay, anyway. All right. They're not mine, though, so I don't need to say about that, I guess. All right. Well, there's cash. So let's do in advance, huh? You want to do that next? Cash now, cash in advance. Got it? Okay, now here's what the deal is. IBM doesn't want to pay, and the taxi company doesn't want to get paid each time there's a ride. What they'd rather do is just pay a lump sum in advance and have a whole bunch of rides. Sound fine? You don't have to worry about the cash and all that. Yeah, not fast with it. Neither side has to. Okay, so let's say that they're going to pay for $1,000 worth of rides. Okay? They're going to pay for $1,000 worth of rides. For a number of rides, obviously. 10, I guess. 100, right? Okay, it's going to be 1,000. What do you want to do? Okay, the taxi company got cash, you debit cash. Why are you debiting cash? Because you got the cash. That's it. What was your credit? Oh, that's tough, isn't it? Do Do they have revenue yet? No, they haven't given anybody a ride. What do they have? Unearned revenue. Now be careful with this. Unearned revenue is not revenue, is it? It's not earned yet. Unearned revenue. You got to know what kind of an account unearned taxi revenue. You like it? Some sort of service revenue, unearned service revenue. What kind of an account is that thing? A liability. You got to know that. I'm not going to pay them back the $1,000. Of course not. I'm going to keep the $1,000. But what am I going to do? I'm going to give them taxi rights until I use up the $1,000, right? Until I earn it. They use it up. I earn it. Got it? Okay, so then let's say we do give somebody a ride and it's a $100 ride. Okay? Now what? That's not much in New York City, by the way. Across town. Okay? So what do you think? Oh, you don't have the unearned revenue anymore? Why not? Because you earned it. Everybody agree with that? If I earned 100 of that 1,000, I don't have the liability anymore, huh? What do I have instead? No, I've got the cash already. Oh, I have taxi revenue. Why do I have taxi revenue? Because I rode somebody around inside my taxi, right? And that's how I earn my revenue. Got it? So I have 100 of revenue, so what do you want to do taxi service revenue? Just like you did here, what do you want to do, everybody? Credit, of course, okay? So taxi service revenue for the 100, okay? And demo what for 100? What don't I have anymore, you guys? I think I earned some of that unearned revenue. What do you think? That liability goes away. You know, if I owed you 1,000 taxi rides, $1,000 worth, and you used up 100 of it, what do I owe you now? 900. It's a miracle. Okay, good. So what we're going to do is we're going to go unearned taxi revenue. Look at that. What happens to unearned taxi revenue? I put 1,000 in it, right? And then I took 100 out. What's left in there? 900 for future rides, I guess, huh? I haven't earned that revenue yet. Got the idea? You know, what we're trying to do here is we're trying to get the revenue in the period we earned it, in the month we earned it, in the quarter we earned it, in the year we earned it. We want to get the cash recorded when we get it, right? That's all we're doing. Same on the expense side. We want the expenses when we incurred the expense trying to generate revenues, not when we paid for them. It doesn't matter when we pay for it. It doesn't matter when we get paid, as long as we do, right? Okay? That doesn't determine how much you make. You know, I used to do this all the time. I work when I do public accounting in addition to teaching. When I was first teaching, I didn't have a PhD yet, so I got paid almost nothing. Now I get paid a little bit more than nothing. Then it was closer to nothing. Yeah, but anyway, so I'd make about twice as much doing a little bit of public accounting in my spare time. And so I did teaching. And at the end of the year, I'd always ask them not to pay me. Sounds kind of strange, right? Because somebody told me in today's dollars would be 40,000 maybe, right? So it'd be 40,000 bucks at the end of the year. I said, please don't pay me that until January, like January 1st instead of December 31st. And they laughed and said, sure. So what they were going to do is debit expense, credit liability. I was a cash basis taxpayer. I wasn't going to pay taxes until the following year on that 40,000. Today's equivalent to $40,000. Then about then, we get $40,000, huh? A full year interest-free borrowing from the government by waiting. What's the risk of waiting, by the way? You might not get paid. You lose the whole thing. Okay, so it works out just fine. I was cash basis, they're approving. Don't worry about that yet, right? But when did I earn the money? When they paid me in January or back in December and November, whatever, the year before? I earned it when I did the work. Right? Do you guys make your money when they hand you the paycheck, or do you make your money, earn your money as you do the work? As you do the work. Same thing with businesses, right? It says that they deliver the goods and services. Everybody getting this? Makes sense, huh? So this just allows us to record it that way. Okay, let's do an advance on the other side then. What do you want to do? Oh, she wants to debit or prepaid. Oh, by the way, what would you credit? We always do the easy part. Cash. Why would you credit cash? Because you paid it. It went out. It's an asset. I have less. Just relax. No big deal. And you have to debit something for 1,000. Why don't you want it to be taxi expense? You haven't used it up yet. ridden and around in the taxi yet. Got the idea? Okay, so what do? We call it what? Prepaid. Prepaid taxi or something. Prepaid rides, I don't care. Prepaid taxi services. You like that? Taxi. Okay? Prepaid taxi services. A prepaid is a what? Let's see, they owe me rides and I don't have to pay for them anymore. What is it? It's an asset. Okay? Everybody got it? That's a real asset, isn't it? Prepaid's a real asset? Okay. Do you believe unearned revenue is a real liability? You have to deliver goods and services to people and they're not going to give you anything anymore? I think it's a liability. Sure it is. Okay? It's just not going to be paid with cash. Good. So then, let's take the ride now. We took the ride. What do we have because we used up 100 of the prepaid? What do we have here when we used up 100 of it? Of rides. We had tax expense. What do you think you have if you prepay it and now you use it? Tax expense. That's all there is to it, guys. And credit? What don't I have anymore? Yeah, I used up some of that prepaid taxi rides, huh? How much prepaid do I have left, of course? And if you bought 1,000, you used up 100 of it. 900. That's it. Okay, looking good? All right. So let's extend this a little bit. And let's do later. Cash later. What do you think? How's that going to work? I give them the taxi ride. All around. They give me nothing. No, they give me something. They give me their promise to pay me later, and I trust them to pay me later, or I would not have done this, right? It's IBM. I could probably give their employees taxi rides, and IBM say they're going to pay me, and they will actually do that, right? I wouldn't do it with somebody I didn't know, and I'd just pick them up on the side of the street, drive around, and say, oh, yeah, send me a check someday. I probably wouldn't do that. But with a company, would you be happy to? Somebody you knew, in general, would you be happy? Sure, they have an account with you. No big deal, right? Do it on account, we call it, right? It's going to be an account what? Receivable, sure. Okay, so what do I have because I rode them around in the taxi? What did I have here when I rode them around in the taxi? Taxi revenue. What did I have here when I rode them around in the taxi? Taxi revenue. Guess what I have if I ride them around in the taxi, no matter when they pay me? Taxi revenue. No kid. It's that simple. Okay, gang. And I can't debit cash because I didn't get cash. I can't debit unearned revenue because they didn't pay me in advance. What do I have? They're going to pay me later. What do I have? Account receivable. And I'm debiting it because debits have to equal credits. But what is accounts receivable anyway? What kind of an account? An asset. Right? They owe me and they're going to pay me later. That's an asset, isn't it? You bet. So I increase that asset. It's just a different one than cash. It's no big deal. Okay? Now let's say they pay me. Later they pay me. What do they pay me with? Cash. So what do I have? Cash. So I debit it. Yeah, it's an asset. I have more. Now I don't have taxi service revenue because they paid me, right? I had taxi service revenue because I gave them the ride. What do I have when they pay me? I've got cash now, and what don't I have? Yeah, they don't owe me anymore, so I don't have that asset anymore. What do? Get rid of it. Okay? Accounts receivable goes away. Got it? Wow. Nothing to this, huh? Okay? Let's do the later on the expense side, right? I'm IBM. I have the taxi rights. I used up the taxi rights, so what do I have because I used them up? What did I have in the first case over here when I used them up? I had taxi expense. Everybody remember that? We had taxi expense up here, didn't we? Okay? What do we have down here in advance when we used it up? Taxi expense. Guess what we're going to have if we're going to pay for it later, when we use it up? Taxi expense, of course. Okay? Okay. Credit what, though? I'm not going to credit cash. Why not? I'm not paying for it. I'm paying later. I'm not going to credit prepaid. Why not? I don't have one. I didn't pay in advance. So what do you have? Accounts payable, obviously. This just becomes common sense, doesn't it? Okay. What kind of an account is accounts receivable over here? Accounts receivable. Asset, yeah. Accounts payable, I jumped on. Accounts payable, what's that? Liability, sure. What does account mean? I didn't have him sign a note. It's on open account. I said it, right? On open account. Trusting her to pay. I'm trusting my customer, my vendor's trusting me. Got the idea? My customers who I sell things to, everybody knows that. My vendor who sells me stuff, right? Vendors. They're vendors. All right. Then what will happen? What do you bet happens something later? We owe the money, we're going to pay it, aren't we? What do we pay it with? Cash, of course. Cash is an asset. What do you have? Less. And what are you going to debit, everybody? It's not expense. Why not? I don't have any expense because I paid the bill. I had the expense when I used the taxi ride, right? It's not a prepaid. I'm not paying in advance. What is it? I am satisfying the liability by giving them cash. I no longer have the liability, right? If you owe somebody $100 and now you paid them, you don't owe them anymore, do you? Just let yourself think, and you got it made, okay? So debit what? Everybody good? This is easy, isn't it? It really is pretty easy. Okay, I want to do one more thing here, though. I want you to tell me what happens in each of these cases to the accounting equation, which I think is balance sheet income statement, right? What happens in the balance sheet and income statement as a result of each of these transactions? And here's the reality. Let's say this happened during the month of February, right? So this was February. Let's make this be February 28th was the ride, okay? February 28th was the ride. February 28th. Whoops. February 28th is when the ride was, okay? So the ride happened February 28th. The ride happened February 28th, okay? The ride happened February 28th. The ride happened February 28th. When must the payment have been here on the payment and the ride are at the same time on these, right? Cash transaction. What about on the in advance? I got paid when, probably? Before, in an earlier financial statement period, probably. So maybe this was January 30th. They paid for all the rides in February. Got the idea? Okay, for future rides. That's a long time in between, but anyway. Okay, so they got paid in January, and then in February, what happens? They have the rides. Got the idea? And in March and so on. Yeah, okay. So this would be paid in January also, right? Got to be the same on both sides of the transaction, huh? And then used up in February. Sort of the idea. Okay. All right, well, what happened later? The rides in February, but when was it probably paid? Sometime in March. So maybe it's March 5th or something. Got the idea? And here too. Okay, so what would happen then, everybody, on your financial statements? Think about what happens on the financial statements. So let's try this. Plug one of these in, and you tell me, for assets, liabilities, equity, revenues and expenses, and net income, what's happening and when. On the first transaction, debit cash, right? And credit taxi service revenue. What happened with that? Assets went up by 100 and revenues went up by 100. Everybody agree with that? You can't make the journal entry unless you know that happened, right? So you already know what happened. What happened to net income? Went up by 100. Oh, I'm out of balance. No, I'm not. What happened to retained earnings, which is one of the equity accounts? If net income's up by 100, what happened to retained earnings? Up by 100. Everybody agree with that? It's true, isn't it? Okay, let's do the second one. What happens there? Now, this is going to be different. What happens in the first month, everybody? What happens in the first month here? I have cash, more asset by 100. Everybody agree? That's that one. I have more liability, huh? Am I in balance at the end of January there? Yeah. How much did my equity change by? Nothing. But I have more assets by 100, more liabilities by 100, nothing else changed. I know nothing else changed because there's nothing in the journal entry, right? Then what happens, everybody? The next month, liabilities go down by 100, right? And Revenue goes up by 100. What happens to net income? It's up by 100, right? Oh, wait a minute. That canceled. Oh, but what happens to equity? Up by 100. Does that sound familiar? Yeah, it's exactly the same on the two different transactions, just in different periods, right? When do you want to show this 100 in net income on your income statement? In January or in February? In February, because that's when I earned it. When do you want to show the cash on your balance sheet? In January, because that's when it came in. Got it? That's all it's allowing us to do is get it in the right financial statement period, right? Okay, let's do one more. We'll do the expenses next time. Let's do this one on later. How is that going to work? How's that one going to work, everybody? I have more accounts receivable by 100, right? And I have more revenue by 100. That'll give me more net income by 100. Yeah, it's just a different asset, right? I have account receivable instead of cash. Big deal. So that's that one. Then what happens? Cash goes up by 100, but what happens to accounts receivable? It goes down by 100. So guess what? Those two canceled out, and what do I have left? Cash is up. Retained earnings is up. Revenues is up. Net income's up. All three of those give me exactly the same result. They're just spread across different months, huh? So I can do a correct financial statement at the end of each month. That's all we're doing. See you guys. Work, work, work. If you haven't done a bunch of these problems yet, get going. Get going. Glad we're not doing a quiz tomorrow. Isn't that when it was originally scheduled? Was it going to be this Friday? Yeah. Now we have a little time. No, it's like, yeah, that's